Welcome back. Good to see you all. Concerns over the future of commodity ETFs continue to grow amid news of CFTC investigations into speculation in the commodities markets. A fourth commodity exchange-traded product halted issuance of new shares this week. How are these actions affecting your investment portfolio, and can commodity ETFs survive in this environment? Joining us now to discuss this, John Hyland. He's the Chief Investment Officer at United States Commodity Funds. He's in the middle of this whole debate. And Matt Hogan, he's Managing Director of ETF Analytics for IndexUniverse.com. Gentlemen, thanks for joining us. John, let me start with you. Describe to our viewers very briefly, how did this happen, number one? And number two, what exactly is the CFTC asking of you? Are they actually conducting an investigation? Are you being interviewed? Tell us what's going on.
Well, Bob, the genesis is last year's run-up in energy prices, I think. Obviously, you had prices rise a great deal, and then they subsequently fell. But in that, you have people looking for somebody to be the fall guy. Somebody's got to be to blame. Traditionally, we would blame OPEC or oil companies. For some reason, maybe because of some lunatic fringe in the economic sphere, people decided to blame passive commodity index funds in general, and to a degree the commodity ETFs, that somehow we were the responsible party. Unfortunately, of course, the data suggests the actual opposite is true. The big oil ETFs were sellers as prices were rising, not buyers. Be that as it may, the CFTC is out looking for somebody to lay this blame on. They're talking to the ETF providers, and they're talking about putting limits on the amount of contracts that can be held by financial investors. And that obviously is a very great concern if you are a retail investor using ETFs, because at the end of the day, what this is going to accomplish is it's going to cause your cost of investing through these vehicles to get higher, and yet I see no evidence that this is going to improve the situation in commodity prices.
John, let me just get in here and bring in Matt Hogan. Matt Hogan, is there any evidence that commodity ETFs are somehow involved in this run-up that we've seen recently, that they're speculators, that they're evil parts of the market here? What evidence is there, and so what if they were part of the run-up recently because people wanted to own commodities?
Actually, the truth is just the opposite, Bob. That commodity ETFs were buying when prices were falling, and they were selling when prices were going up. If you actually look at the data, it makes intuitive sense that they would drive up markets on a basic lay level. But if you look at what actually happened, it's just not the case.
Yeah. I want to ask you, Matt, and maybe one of the things we ought to do is Mr. Gensler, the head of CFTC, ought to bring in the Chinese. Bring back that first full screen, because this week I thought it was startling that the Chinese government, that there was an acknowledgement that they had been actively buying commodities earlier this year, that they had stockpiled 570,000 metric tons of aluminum to figure out what to do with it later on. And then, of course, we saw what happened with aluminum prices, and we saw what happened with copper prices since they started buying in March. They went up. I mean, look at that. Mr. Hyland, maybe Mr. Gensler at the CFTC should subpoena the Chinese premier. Ask him whether he's a speculator or not, and maybe he'll just claim he's a hedger. I'm being facetious, but you can see where I'm going with this. There's a very good example of somebody who definitely affected the commodities market.
Well, I would agree. I mean, it's quite clear that the run-up in commodity prices was revolved around supply and demand, as you would expect. It's not a function of financial investors taking positions in the futures market. That's just clearly wrong. It's wrong theoretically, and it's wrong based on the data, as Matt has pointed out. But at the end of the day, the CFTC doesn't really exercise jurisdiction over OPEC. It doesn't exercise jurisdiction over China and India's buying of commodities, and it only somewhat exercises jurisdiction over oil companies. They do, however, exercise jurisdiction over users of futures. And that's why I think we become the focus.
Right. Is it possible? Gary Gensler is the head of the CFTC. He's been on our program many times. Is it possible to say that Mr. Gensler is between a rock and a hard place right now? That he's got a lot of pressure. There are people who honestly believe that there are dark, maybe mysterious forces that are manipulating things, particularly commodities out there. He wants to get a satisfactory answer. How can he do this without causing so much damage to the markets. What should Mr. Gensler be doing?
Well, I think he's got to look at the data. He's got to look hard at what's actually driving the market, what's correlated with rising prices and increased volatility, and not just take the sort of simple story at face value. If you actually dig in, there probably are good regulations to be had in here, but excluding individual investors from the commodities market by getting rid of commodity ETFs can't be the right answer.
Yeah, I want to put up the U.S. Natural Gas Fund versus natural gas. I wonder if we can do that. And Matt, you can explain here what's happened because there has been a suspension of the issuance of new shares. Keep that up for me. You'll see that the fund itself is trading at a premium to natural gas, which is below it. That's the white line is natural gas. The yellow line is the fund itself. And they should be trading roughly in tandem.
Absolutely.
As a result, we've got a distortion here. What does that mean for somebody who would buy this right now?
It means you shouldn't be buying it. It means people who are buying it now are overpaying by about 20%. They're not getting the true net asset value of the fund. And if that premium comes back down, and we have every reason to believe eventually it will, they're going to get hurt.
Do you think, John Hyland, that the CFTC may somehow make some statement, or I'm trying to figure out where they might go with this, that commodity ETFs should be exempt from this investigation? When does it end? When does it conclude with some kind of finding?
Well, we're obviously expecting by the late September or October that they will probably announce some action. I personally believe you're right. They are between a rock and a hard place. I do believe, amazingly enough, that the CFTC needs more resources, needs more economists, and they need more tools to keep track of flows. On the other hand, we do not agree at all that they should be restricting the ability of ordinary investors to invest in this area. And in fact, to a degree, there's a little bit of playing with matches in a dry forest. It's not just my 500,000 or 600,000 shareholders that are going to be negatively impacted by badly designed rules, or the maybe million shareholders between all the commodity ETFs. There's another issue here. If you put restrictions on financial players, the futures market will probably suffer a noticeable drop in liquidity, and that will lead to a noticeable rise in volatility.
Yeah.
And we could have a year from now, there could be another set of hearings where Chairman Gensler is going to be asking, right, how come the market got so much more volatile after our wonderful solutions? And we're going to say, we warned you.
That's the law of unintended consequences. John, we only have a few seconds left. What are you doing to get around this problem right now? I mean, people are want to own the fund. You're not issuing new shares here. What are you doing?
Well, we're working on reducing our reliance on the listed futures that the CFTC has evidenced concern about. We are looking at doing trades with physical players and other over-the-counter parties. We are working on trying to get back to a point where we can do creations and obviously get our market price closer to our NAV. But ultimately, we're dependent on what these rules will be and whether these rules make sense, or whether these rules are, catering to what I described as sort of the economic lunatic fringe of who are just looking for somebody to blame and they don't care who.
And the important thing, Matt, we got to go right now, is that if there is some ruling from the CFTC exempting commodity ETFs, that premium on the U.S. natural gas fund is going to collapse.
That's absolutely right. And it's not just UNG, it's GAZ and a handful of other funds. So investors got to be careful.
That could be serious problems for commodity ETFs. Of course, we're going to be on top of that all throughout the next several weeks. Thank you, Matt Hogan, John Hyland. Appreciate it.